morning, traders! Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to share with you some of our wave counts and trading plans for this week. Before we start, please visit us on elliottwavestreet.com, and in the membership tab, you will find our live market analysis membership, where you will find the forex, the stocks, and the full access. So we have a special offer where you can access the first month trial for just $19 to trial out all the fantastic analysis we have inside, plus education. You will get access to education as well. We have the Elliott Wave crash course, we have the volume profile course, we have the momentum course, we have the candlestick course, a lot of education to learn how to use and find the end of the waves. This is the euro, and we are here on the 4-hour chart. The plan on the euro is to have this week another leg down. Price did this first impulse, and from there we're seeing a lot of complex price action. As we can see, this is a complex flat formation from the Elliott Wave point of view. So as Elliott Wave traders, we're finding the end of 2 this week to short and target the previous low around the 95.50 area. Let's combine the analysis with some momentum analysis. In the members area, inside the members area, we have a fantastic MACD course related with Elliott Wave. So we know that finding the end of a wave, in this case finding the end of wave 2, is subjective, right? Because we don't know where wave 2 is going to finish, where should we trigger the trade, where should we place the stop loss. So most of the times is a little bit complex, this process to find the end of the wave. With momentum indicators, we can combine what we are seeing in the price action with the indicator to understand what's going on. So first of all, in the MACD, look on the left how the MACD and the signal line were able to cross the zero line during this leg down. When we are in an impulse, usually we have that nice cross pretty clean in an impulse or in a deep corrective. But look at the difference right now with the real market or the live market cross. Completely different. Right? When they approach the zero line in this area, in this case, they were absolutely bearish because they were apart. The signal line and the MACD line were apart from each other when they were crossing the zero line. Question: this time, we are seeing the same thing? Are we seeing the same behavior? Of course not. Right? We're seeing the price and the MACD losing momentum because the MACD line and the signal line, they are together here. They are just together. The next step in this narrative is seeing the MACD line, which is the blue line, crossing down the signal line. When we have that, we are going to have a validation that our wave 2, our second wave, it's complete. And look at the beauty of this setup, because this cross here was telling that our wave 1 was done or the wave 2 was active. But since there, we didn't have a bearish cross to sell the wave 2. We get back to the zero line and we didn't have any cross to the downside yet. When we move to lower time frames, let's say the hourly chart, here we're going to be able to find or to accelerate the entry. So right now it's happening something interesting because the price is reaching a hard high, but the MACD is not doing that yet. So this is the concept of divergence. But look how great is to combine the divergence concept with the wave count, because we know now that we have divergence, and this is likely to be wave 3. Now price is building the 4, right? And the next step in this plan is having wave 5, and from there, at this rejection, probably this afternoon, I'm planning to sell the euro with a nice supply candle. Actually, what we are doing with all this analysis is reading supply and demand. If we have our wave count completion of 4 and 5, and we still have our divergence on the MACD, and we start seeing the MACD crossing down, like starting to hook down, and let's say that the signal line also makes the reversal, and we start seeing the signal here, and we have the supply candle showing up at the high, we will have confirmation from price action plus our MACD that is reading the momentum of the price. The MACD is just the same price but presented in a different way. That's it. It's nothing more than that. It's the same price, but the key aspect of the MACD is that it's letting read the market price, the market momentum, the market speed, easier than just with the bare eye, because we can easily understand the momentum here, right? So far the MACD have not showed the signal to sell yet. Seems that it's going to happen today during the afternoon. Looking for that sell trade. And this is just an example of the application of the MACD. In the membership, we have a whole course about the MACD with different setups, with the way to link together the momentum indicator with the Elliott wave count in order to validate the end of the wave, and also to validate the wave count and the right wave count, if it's an impulsive wave, if it's a corrective wave, if it's a wave 3, let's say. So the MACD or any momentum indicator can help us to understand better the price action. Of course, price action always is going to lead these indicators, but when you check the momentum and everything, and you connect what the momentum is telling with the wave count, is something just terrific, that you will understand better what's going on. Let's have a look at the S&P. The S&P today has been climbing. Let's see it from the MACD point of view as well. So this is the hourly chart, and these MACD crosses have been pretty clean. Look, this one was telling that wave one it's complete. We have a beautiful divergence here at the end. Okay. Then we have a sell-off. Here we have the cross saying that wave A, it's complete. Look, we have some lag, right, from the low and the signal. And then we are in wave B, and so far we don't have that attempt to cross down, because we can anticipate a MACD signal when we start seeing the MACD losing momentum. Right? When we start seeing the MACD fading momentum, losing momentum, we can anticipate and we can move to lower time frames to get the signal. But in this particular case on the S&P, the MACD is still pretty strong, so we don't have anything yet. Maybe it's going to play around today during the session here, like to take out this high, reject, and in that case we can start selling at the market high if we have a proper rejection, right? I think that for a bigger picture perspective, we could be at the bottom of the market. Here, we could have this week price testing this area under A, and if we have a successful rejection at this area, is where we can go long. There is something else that is key when you are learning or when you are using the Elliott wave theory. One of those key aspects is that when you learn the Elliott wave theory, you are looking for a 5-wave sequence, right? 1, 2, 3, 4, 5. But when you find something that looks like a 5-wave sequence in your chart, you start doing crazy things, trying to buy when the price is falling. And actually, that's a huge mistake. Because if there are many things that we need to check, of course, and in the membership we talk about different aspects to check during the momentum analysis. But let's suppose that we have a big sell-off here. That's not going to work. So we shouldn't try to be buying. So the thing is that when we have C coming here, it should be losing momentum and should be quickly rejecting under A and moving above A, because it's showing buyers, it's showing demand, it's showing lack of supply. So in this particular case on the S&P, to validate the longer term entry, we will need to have price coming down under A, rejecting with a nice demand candle here. And from there, starting to have a beautiful leg up to the upside. Of course, we go long from here. And we should have divergence between A and C that could be using an indicator like the MACD or RSI or stochastic or awesome oscillator, or just with the price action. But something that we shouldn't be seeing here in order to go long is, let's say that we start seeing some red candles moving down here, is not going to be a wave 2 anymore, because this sort of price action is not losing momentum. And if it's not losing momentum, it's telling that supply is too strong, that demand is not entering the market, and we shouldn't be trying to go long, even if we have a wave count that is telling that we have a wave 1 and a wave 2. So the C leg during wave 2 is key to understand the market price action. Is key to understand what we are seeing there. Is key to understand that we should just follow the price to the upside, right? So or to the downside, whatever. So that's key. All right, traders. So that's the plan for this week. If you want to have the whole analysis on the S&P, on the Nasdaq, on the Dow, on the Bitcoin, on the Euro, or individual stocks, sign up for the Elliott Wave Street membership. You are going to get a lot of value, not just the analysis, but the education as well. You're going to get a daily video, Monday through Friday, covering all these markets. So please have a fantastic week in your trading. I'll see you inside the membership. Take care. Bye-bye.